Well, hey there, and welcome to the Animal Donut channel. My name is Jeff Luke. I'm a professional photographer, and I am the author of Stock Market Intelligence. And today, I want to show you how I invest. Now, you may have noticed that I've got a couple of pineapples here. And there's a reason that I sit between two pineapples. There's an expression that I learned when I was in Brazil, and it's called descascar o abacaxi. And what that means in Portuguese is to peel a pineapple. And it's used to describe any kind of process that's kind of delicate and really difficult to do. If you've ever peeled a pineapple, you know, like you've got to cut enough off so you don't wind up eating these little sharp spiny things on the sides. But then if you cut off too much of them, there's barely any pineapple left. So it's the kind of thing you got to be careful when you're doing, and it's easy to screw up and you get juice and slop all over the place and you don't want to eat the sharp. So I find it's kind of analogous to investing in stocks, because when you invest in stocks, there's this hope that you buy the right stock and then the stock price goes up and you're happy and everything's good. Maybe you buy more, but the reality of investing is there's a lot of risk involved and there's a lot of volatility, and sometimes people make decisions that seem really good at the outset and then they wind up just being disasters. You know, we're all kind of vulnerable to making decisions that are imperfect. So I have a way that I personally invest that I would say hedges some of my own internal biases towards stocks that I particularly like and kind of balances things out a little bit. So let me tell you a little bit about how I do this. All right, so now I'm going to tell you how I invest. At the start of every month, I want to put a certain amount of money into the stock market. And what I do is I divide it into two parts. And this part over here, I put into a broadly diversified index fund ETF. And this part here, I put into a stock. Now you might say, why do you divide into two parts? And I'll tell you. First of all, I love stocks. I really love to study them and research them and the whole process of learning about companies and investing in stocks. But I know that I have certain biases and that I might be attracted more towards technology stocks or towards growth stocks or towards stocks in sectors. For example, I'm a photographer, so I know a lot about Adobe and I really love the company and I understand its products. But that can also mean that I might go overweight into a company like Adobe just because I like it so much. So by investing in a broadly diversified index fund ETF, I'm able to invest not only in Adobe, but like hundreds or thousands of other companies as well. So I feel as though I'm able to build up my core by every month investing in the index fund ETF, but also invest in the way that I want, which is to accent or complement that index fund ETF investment with stocks. And I will say this, I've done a lot of research about ETFs. I wrote a book that just got published this year called Crush It with ETFs. And so, I read and learned about hundreds, thousands of ETFs. And I figured out kind of which ones were a good fit for my own investing style. In case you're new to ETFs or you're new to investing and you're trying to get a grasp of how to start investing and how to begin, I would say this. If you're diversified and you want to spread your money out across a lot of different stocks, your main decision is whether you want to stick to stocks that are based in the United States, or if you want to invest in US stocks, but also stocks in other countries around the world. For the US, then, you can break that into two different kinds of index funds. One of them would be just the S&P 500 index ETF. And that's just the 500 largest companies. Vanguard's fund is VOO, or you can invest in a total stock market index. Vanguard's is VTI. VOO is just the largest 500. VTI also includes mid-cap and small-cap stocks. So you get money spread across all these different asset classes. It's a more diversified fund, VTI. And then for investors who want to invest internationally, Vanguard offers VT, which is the Vanguard Total World Stock Market ETF. And VT invests in the same stocks that are held in the S&P 500 and VTI, the total stock market, but also internationally in companies all around the world. So that is like complete diversification across countries and also across asset classes. That is a mouthful, but the idea is that you take a lot of the decision making out of the process, which for some people who either don't want to spend a lot of time researching stocks or aren't very good at it, they can just remove all of that doubt and decision making by investing in an ETF. The stock investing, I just find fascinating for me. And so I feel that if I were to just stick with the ETF, it wouldn't work with my own mind in the way that I like to learn. So I'm able to enjoy the stock picking part of being an investor, but also balance that with the diversified holdings of an ETF. And I just want to run through a couple different, I mentioned a few different ETFs. I'll just run through the holdings because I think this might be interesting to you guys. With the S&P 500 ETF, now a lot of different companies offer these, but Vanguard's is one of the best known, so I'll just say top 5 holdings are Apple, Microsoft, Alphabet, Amazon, and Tesla. And there's 7.1% in Apple, 6.1% in Microsoft, 4.1% in Alphabet, and on down the line. These same stocks are the top 5 holdings of the total stock market ETF and also the total world stock ETF. They're the same 5 holdings. As you go through the list, you'll notice that all of these ETFs hold some of the same stocks because these are the largest companies in the world. The difference is that you gain different exposure through the different ETFs, and it really is a personal choice into how widely you want to diversify your holdings. I think that the most important message of this whole video here is what the value is of this monthly plan. I've chosen to divide it into the ETF and the stock. But I think at its core, this encourages me to invest every month. And the value of investing at intervals is that it takes the mental part, which tends to lead us to try to time the market. It just takes that out of the equation. Because I think as humans, we're either greedy or we're fearful. It's just built into us. And during times like these, when the markets are really volatile and the stock market is going down almost every month, there's a tendency to tap the brakes and not invest because you see things getting worse in the economy and in the world, and you say, I better just not invest in the stock market because the prices are going down and they're so low now. Maybe they'll get lower later and I don't want to risk losing money. But this is how human biases work against you as an investor. And so this would prevent you from buying stocks when prices are going down. So what the monthly investing does for me is it just forces me to invest, and not in a difficult way, just it makes sure that it gets done, just like brushing your teeth and flossing or going out and doing some exercise each day. If you make it part of your routine and make it a habit, then it just gets done and you don't have to think about it. And so I find that this system works really well for me because it takes the mental part and it just removes that from the equation. And I know that in the past, when I did not have this monthly plan, I would sometimes wait and look at the market and try to outthink the market, and it just adds a layer of complexity to life that you really don't need to have there. So anyways, I think this works because it helps you to spread your investments out over time. And by investing over time, you reduce the risk of going all in at any one time and making an error or a misjudgment. Hope this info has been useful to you. If you have any questions about ETFs or stocks, please put them down below in the comment section. I will read as many comments as I can and I will respond to them. I hope that this is useful and that you've learned something. I think the main takeaway point is there are different approaches to investing. You don't have to invest only in stocks. You don't have to invest only in ETFs or index funds. And there are ways to combine them, but also to do it in a way that you can make investing a habit and do this over time at set intervals and make it a part of your investing life. Please remember to subscribe to this channel if you would like to see more videos like this. Forward this to a friend, or if you find it helpful to you, share it with other people. And also consider subscribing to the channel and hit the little bell icon, and that way you will get a notification whenever I make a new video. Look forward to seeing you in the next one. Goodbye.